especially focus and talk about retrospective tax worries. Those are returning to haunt global investors. PTI reporting that nearly 100 foreign funds have gotten tax demands to the tune of $5 to $6 billion. This is based on provisions of the minimum alternative tax regime or the MAT regime. This, of course, was something that Finance Minister Arun Jaitley had also mentioned in the union budget, saying it will be addressed. But that PTI report goes on to say that the more investors are being assessed, the total bill may reach nearly nearly $10 billion. I beg your pardon. To take this discussion forward, I'm being joined by independent tax expert Dinesh Kanabar. Mr. Kanabar, always a pleasure chatting with you. Let's start by getting your initial comments on the fact that more companies may be coming under this entire retrospective taxation net. What are you really making of that?
So in this budget, there is a proposition that minimum alternate tax should not apply, the book profit tax should not apply to FIIs on the income which they earn by way of a sale which they make on the stock exchange. And that entire amendment is prospective. And therefore, the question which is today staring at the taxpayers and the tax office is whether, in respect of the past years, when this provision was not on the statute, what is the correct position of law? The tax office would like to believe that but for this amendment, book profit tax is indeed exigible on the gains which are made by FIIs, whereas FIIs would like to believe that if they are not maintaining books of accounts in India, they do not have any book profits to report, and if there are no book profits to report, there is no question of a book profit tax. And on this subject, there have been conflicting judgments of the authority for advance ruling. The matter is pending before the Supreme Court, and we are looking at one more issue which will continue to be a thorny issue until the Supreme Court gives its judgment on the subject.
So, I want to pick up on what you just mentioned about the finance minister talking about the application really of MAT as far as these foreign investors go in the union budget, saying that short-term capital gains arising on transactions on which STT, that is not chargeable, but, the whole issue of MAT itself for foreign investors, but the government saying it is looking into the matter to allay genuine concerns, but no assessment to nullify the notices. What really is the sort of leeway then which is available to companies? Because on one side, like you're saying, you have the tax department which is sticking to stance, and on the other, you have the government which is saying it will only look into this, it will try and nullify concerns, but there's nothing more that can be done.
I really don't know what is meant by allaying the concerns of investors. Clearly, the proposition which is proposed to be enacted by the Finance Bill of 2015 is twofold. First, that it applies only to FIIs, only in respect of gains which are made by where securities transaction tax is paid, and again, it does not apply to any other income other than capital gains, and it is prospective. Therefore, we are open up on the issues on whether this applies to the past year, whether it applies to other investors, and whether it applies even to FIIs on income which they make other than on capital gains. So, for example, if you earn interest income, where, for example, under ECB regulations, you are required to pay only a 5% tax, would you have to pay a 20% book profit tax? So, we are open on all of those issues. And if I hear the authorities right, they believe that their stand on this situation is that this needs to be decided by Supreme Court. The amendment will only be prospective and not retrospective, and which is again actually absolutely improper, because if the government does consider the position to be that going forward these items are not subject to tax on MAT, then why would it not make it retrospective the way it does when it comes to issues which are unfavorable to taxpayers?
What happens to sentiment, Mr. Kanabar, in this scenario? What happens to the investment sentiment? That, of course, is the big talking point.
So, if you look at the sentiments, again, I would break it up into two parts. At least today, what is being transacted on the stock exchange, the FIIs have a certainty that it will not be subject to book profit tax. Where the issue comes in is what happens on the past profits which have already been earned and which is subject matter of litigation. And therefore, on a broader thing, that when this government came in, there was a substantial expectation that the tax regime would not be adversarial, that one will find answers from the government without having to litigate the matters all the way to Supreme Court. And what the government does seem to be missing out is that it is still asking people to litigate the matters all the way to Supreme Court rather than come back and take bold decisions to say, we accept the position that book profit tax is not payable. So to your question, I think the investor sentiment will be negatively impacted because the trust which is sought to be built between the taxpayer and the revenue is not being built because you are still continuing to litigate on this issue.
A quick last word, Mr. Kanabar, and this is as far as Nokia goes. That again seems to have no resolution. The latest we understand is that Nokia is really seeking intervention on the part of the Prime Minister, on the part of the Finance Ministry officials. That has been going on for a while now, sir. Although Nokia India is saying it is prepared to put the entire money into an escrow account, how are you reading all these latest developments? Do you expect some resolution there soon?
Well, I have no knowledge of Nokia seeking involvement of the Prime Minister. But the fact of the matter is that before the courts, where this matter is going on, before the Delhi High Court, it has been the stand of the tax office that until Nokia deposits about 3,500 crores of rupees, the income tax department would not like the stay to be vacated on the disposal of the undertaking which they have in Chennai, which again I think is very, very unfortunate. I think where we are all seeming to head toward is to say there will continue to be a confrontation, there will not be a resolution until the courts intervene and make a decision. So this entire issue, here is a situation where there was thousands of people being employed in India, becoming unemployed. The unit could not be sold because of a demand which is hypothetical, which is not even raised. And where the taxpayer is coming back and saying, dealing the two issues, let's carry on with our business and let's find a way to secure what the government wants rather than asking us to put money in our pocket, from our pocket and put it and deposit with the government. And the government is just not willing to hear it.